Imagine this, you wake up coffee in hand and glance at your trading app. Green, green, green. The market's soaring, your watch list is on fire, and opportunity is knocking. You rub your hands together, ready to capitalize on the day's gains. But when you try to log into your Fidelity account, nothing. Error message. Try again, same error. Suddenly that hot coffee turns ice cold in your stomach. This, my friends, was the reality for countless Fidelity users on May 13th, 2025. The market was having a banner day, a real bull run, and everyone wanted a piece of the action. But for many Fidelity customers, the only action they were getting was the frantic tapping of the refresh button. It was a classic case of the worst possible time for a technical snafu. And as minutes turned into an hour, the frustration began to boil over. On the morning of May 13th, 2025, Fidelity, one of the largest brokerage firms in the United States, experienced a significant system outage. Users attempting to log into their accounts were met with a variety of error messages, preventing them from accessing their portfolios or making trades. The timing couldn't have been worse. The market was in the midst of a strong rally, with major indices surging upwards. Investors were eager to buy in, ride the wave, and potentially make some serious profits. But instead of executing trades and watching their portfolios grow, Fidelity customers were stuck in a digital waiting room, their money effectively frozen in time while the market marched on without them. The outage wasn't a complete blackout. Some users reported intermittent access, while others couldn't get in at all. This inconsistency only added to the confusion and frustration. As with any major tech hiccup these days, the immediate reaction spilled onto social media. Twitter became a digital sounding board for frustrated Fidelity customers. The hashtag #FidelityDown quickly gained traction, filled with a mix of complaints, anxious inquiries, and of course, the inevitable memes. Some users shared screenshots of error messages, while others vented about missed opportunities. Some joked about switching brokers, while others questioned how such a large institution could experience such a crippling outage. The sentiment was clear. In the fast-paced world of trading, every second counts, and any downtime is unacceptable. Section 4, the price of inaccessibility, missed opportunities, and emotional roller coasters. The financial implications of the Fidelity outage were real and potentially significant. For day traders who rely on quick entries and exits to capitalize on intraday price movements, the inability to access their accounts could have resulted in substantial missed profits. Even for long-term investors, being locked out during a market rally meant they couldn't buy into positions they had been eyeing or adjust their portfolios as needed. But beyond the purely financial, there was an emotional toll as well. Watching the market climb while being powerless to participate is a uniquely frustrating experience for any investor. It breeds a sense of helplessness, even anger, especially if the outage persists for an extended period. This incident served as a stark reminder that even in the digital age, our financial well-being is often at the mercy of technology and the companies that provide it. Section 5, Echoes of Outages Past, Robin Hood's Troubles, and the Importance of Learning from Mistakes. The Fidelity outage wasn't an isolated incident in the world of online trading. In recent years, several other platforms, including Robinhood, have experienced similar technical difficulties, leaving users locked out of their accounts during crucial market moments. These events sparked widespread criticism and calls for greater accountability and reliability from trading platforms. Robinhood, in particular, faced intense scrutiny and regulatory backlash after a series of outages in 2020 and 2021, which coincided with periods of high market volatility. The company was accused of putting profits over platform stability, failing to adequately invest in infrastructure to handle surges in user activity. Section 6. In trading, trust is earned one trade at a time. The high stakes of platform reliability. The Fidelity outage served as a potent reminder that in the world of online trading, trust is paramount. When users entrust their hard-earned money to a platform, they expect, at a minimum, that the platform will be accessible when they need it. Outages, especially during critical market moments, erode that trust and can have long-lasting consequences. For Fidelity, the challenge now is to rebuild that trust. A thorough investigation into the cause of the outage, transparent communication with affected users, and concrete steps to prevent similar incidents in the future are all essential. The company must demonstrate that it takes platform stability seriously and is committed to providing a reliable and trustworthy experience for its customers. Section 7. Beyond the bottom line, the human cost of technical failures. While the financial impact of trading platform outages often dominates headlines, it's important to remember the human cost as well. Behind every missed trade, every frustrated tweet, there's an individual investor whose financial goals and aspirations are put on hold. For some, it might be a missed opportunity to grow a retirement nest egg. For others, it could mean delaying a down payment on a house or funding a child's education. These outages are not just abstract technical glitches, they have real-world consequences for real people. Trading platforms have a responsibility to their users that extends beyond simply providing a service. They must strive to create a reliable, trustworthy, and ultimately human-centered experience, one that recognizes and respects the financial well-being of those who rely on them.